There is one stock that's about to break out, in my opinion. It is Wayfair, ticker symbol W. If you haven't heard of Wayfair, they probably like that. They are still recovering from a 2020 controversy that was allegedly baseless, involving child trafficking that implicated the company. They do furniture. Think IKEA. They have large retail stores. Notably, they sell the majority of their furniture online. I don't know exactly why this company is able to beat off Amazon, why people go to Wayfair for their furniture, but the brand is strong. It's inexpensive furniture, and the retail stores, I think, are succeeding despite other retail just shuttering their doors, because I know where I live there's a mattress store that does well, because I think the shipping is a lot on big mattresses or big pieces of furniture, so picking it up locally gives the customer the savings, assuming their time is not worth much. And then also there's fewer SKUs, I think, with bigger items. It doesn't really matter what I think. The chart looks great. There's been significant buying activity and price agreement for weeks, which helps because at this point it's going to go up or it's going to go down. It's going to make a move. So we get to decide if we're going to get in and risk very little and get in at a spot where there's been agreement. So we'll look at the chart to show what I'm talking about here. We'll look at some info about the company to help us fill in the gaps on why they're doing well. And if you like these videos, hit that like button. Let's get started.
This is Sam Putnam.
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 So this is what I'm talking about, where it's gone sideways since the beginning of September. Yeah, sure, it dipped down, but it found support at this level here, off of this line, which is a moving average, which a lot of people have on their broker. It comes by default on Robinhood. This is a 50-day moving average. So we are way down from 2021 levels where there was a ton of euphoria, not just on technology stocks, which Wayfair.com is a technology stock in the sense that it's an e-commerce company, which I think has allowed it to weather the storm that a lot of retail companies, Restoration Hardware, Target, Walmart, they're doing okay, but none of these look like they've really been reaping the gains that most companies that follow the market, there's the market, have achieved this year. So this is Wayfair, and that's the level to buy it off. It's coming back to this level again. It looks like testing it again. So this is a higher low. So even though it did test it, that's okay. You know, it moves 5% a day. You can risk maybe 1% or 2% and look for a move of 10% just back up to where it was. Maybe you sell half, maybe it starts to digest here, and then it really might give the move that I'm looking for, which is another 10%. So if you have half your position, now you're up to these high mid 90s, and maybe you'll get to test that $100 level. Of course, you don't want to hold a big position to earnings, but that's also a full 3 weeks away plus. So yeah, exactly 3 weeks away. With all that said, let's jump into a little bit of info about the company. Prime Day. Is that right? Is today? Oh yeah, Amazon started to do multiple Prime Days. I guess these are the Prime Days. Somehow Wayfair is participating in that. I think there must be a way to shop Wayfair products on Amazon that they've extremely optimized. Looks like they have their own deal week. I've certainly been hearing Walmart ads all the time for Christmas already. Holy moly, New York Post. That's quite the pop-up. But, yeah, Wayfair is in the conversation with these massive companies. There's their 60% deal week. This article is probably sponsored. Seems like there's some affiliate links in here. Good for the New York Post. So all we have to say is, yeah, there is some reduced spending according to the CEO as of last year on big ticket home items. This is bad, $500 million net loss. A little bit of a decline in net revenue. This is such a big number that's not significant. But the net loss is not good for a company that's doing $10 billion in revenue. This is what they've done, I think, to have their share price go up, is they closed all of these stores. Well, these aren't stores. These are just people working, like the corporate office. And then this is interesting. This is what I was talking about in the beginning of this video. They're doing these big pop-up stores, which I think works because people want to look at furniture in person. There's something about it, even when you can shop and get your pants online and all that. You can try them on, send them back if they don't fit you, I guess. I don't know exactly. I don't do that much clothes shopping, but at least where I live, there's furniture stores still. Well, not ones that are low budget. It's complicated. I don't fully understand it. This seems like they had an idea. They're running with it. We'll see how it works. This is the most important thing, I think, for the stock. This was in early 2025, and they've followed the market. I mean, it's been a 300% up move. I guess that German office, 700, 800 employees doesn't sound like a ton. 3% of its global workforce. But, what's bad for Main Street is good for Wall Street, right? So people lose their jobs and then the price of the stock goes up. It is what it is. There was this allegation that I mentioned. I don't think anything came of it, but people still talk about it. So there's that. And the restructuring has been positive. These are the other companies. Amazon is not one that looks like a great buy right now. Wayfair is kind of giving a base here after a big run. Amazon this earnings reaction was ugly. And then, this is a higher low, but it still doesn't look as much of a setup as a company like Wayfair, where we can kind of give a picture of what could happen here, okay? And hopefully that breakout occurs, if it does occur, before earnings, so you can trim some or most of your position into earnings. Now, there's a lot of companies that do furniture, home furnishings. IKEA is the one that seems the closest to Wayfair. Target too. But I'm not really equipped to compare all these. This is what is more up my alley. If they're working with Google Cloud for personal shopping experiences, I think what that means is you get to see the couch in your room. Maybe you can spin it around. Of course, we've seen that. You see multiple pictures. That's like what Amazon started in the 90s. Maybe the carousel of pictures on an HTML site. But they're given a shot at modernizing. Obviously, they call themselves Wayfair.com. Well, in 1999, that was a red flag, but now it's at least a sign that they're trying to compete with Amazon, which is good as an investor. And this could be a good sign too. I mean, we can see exactly what they're working on here. This is also a good sign, providing financing to help people buy their furniture who maybe can't afford it or shouldn't really be buying it, but want it. You know, that's not really for us to say. Most people buy on credit. It is what it is. And it's a low price furniture store, so they're helping make that happen. It was actually at an event, so it seems like kind of a bit of a science project. But the recommendations is big. I mean, that's why Amazon is so popular. Their collaborative filtering, or their, people buy this with this, is so good that it makes it exciting to go back to Amazon and see that what you're buying is what other people are buying, or you're buying the right, soccer goal with the right, soccer cones, or I don't know. I haven't bought something on Amazon recently, but you get what I'm talking about. This is pretty amorphous, generative AI, but whatever. It's a big company. They have a bunch of data. Of course, they use Google Cloud. Of course, there's going to be some AI. And this is positive, okay? Maybe being better at serving items that are alternatives to what people want. Maybe keeping that unsold inventory down. There's a lot of applications for AI beyond the super sexy stuff, like showing a couch in your room with VR or something like that. But it seems like this was a positive collaboration. They have some links to some Wayfair products. These are inexpensive, but I wouldn't say these are cheap. I mean, I guess it makes sense why they're still in business. So that's some info about Wayfair. This is kind of what I'm talking about, kind of like the real estate AR VR hype that was very exciting a few years ago. I guess that sort of got a little dampened it got exciting during COVID and then dampened when Meta got less psyched about the metaverse happening in the near future. They do have sort of, it sounds like, a Prime type membership financing, as we talked about. And they're well into advertising, which is big. Amazon initially became so big partially because they advertised on Google AdWords. So there's the $3 billion in revenue. This $200 million doesn't sound like a ton of EBITDA on $10 billion in revenue, or I guess it's only $3 billion in revenue. But maybe 10%, a little less than that, is pretty good. And we also never really know what adjusted is. If you do know what adjusted is, as a general rule, go ahead and drop that in the comments. But in general, I think that's a little hand wavy. And besides, we don't really need to know exactly how to do their accounting for them. They do have, this is substantial. This is really what we care about. That's almost all the revenue from the US. And that's the Q2 earnings, which were strong, which is important. This is the strongest quarter since 2020 with 200 plus million of free cash flow. So that is a huge repeat customer rate. And that's a big move since Q2 earnings, when a lot of companies sold off or went sideways on Q2 earnings. Netflix down a little bit. There were companies similar to Netflix, Spotify, that sort of went up a little, and even some companies that started looking strong did sell off initially. Shopify having a big push, and then the worst of all that I can think of was a company like The Trade Desk. But I'm not here to talk about other companies. This is the idea. Those are the price levels. We're well above that previous all-time high in 2024 in May, and now we're looking like we're to establish a new level and a higher low here. We talked about where to buy it if it sets up for you. And if you like these videos, if you like these videos, head over to stockscommunity.com. And I got a little ahead of myself, but I do want to tell you that you can try that out for $25 for 7 days, and you'll get the best stock idea every morning. It's not a day trade. It just happens to be at a spot where I think it's a great time to get into it on that particular day. So if you're looking for an active day trading room talking about news that comes out in the middle of the day, this is not it. It's really about curating all these ideas and just giving you what I think is the best one, and also answering questions, and other people can, chime in as well. So that's where the community part comes in. So try that out. If you like this video, like it. If you haven't hit that subscribe button, hit that subscribe button, and I will see you, here we go, in the next one.
This is Sam Putnam.
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 This is Sam Putnam.